You have 3 voicemails.
The number one response that I always get is exactly what you said. It's a store of value. It's the same as gold. Why aren't we going out to the stores and buying gold instead if we really believe in this store of value concept?
It might not be a future of investing for you, right?
You're certainly holding back on your wording for this podcast. I don't think you sound like that when we talk one-on-one.
Real estate is being transformed into a product business rather than just bricks and mortars. And that's what makes it so interesting.
Hello there.
Welcome to the show where we have the convos about Vietnam, you know.
Hello there. Welcome to Convo Comrades, a conversation with the community about Vietnam. In the previous episode with our golden guest Andy, we talked about the basics of investing, what investments are, why do people invest, and what got Andy into investment in the first place. And in this episode, we're gonna continue on that. We're gonna develop further, talking about careers in investing and the future of investing. So Andy.
Hello.
Can you tell us more about what you do in your current job as a property investment?
Yeah, so I'm currently working at Fora. And what we do is basically we acquire properties, operate it as co-working. So mainly our main area of specialty is commercial property. On the investment side, I underwrite investments. What it means is that I crunch the numbers, work with the architects, work with the marketing team and sales team to develop a business plan, and then assess the business plan in the numbers, stress test it, see if the returns make sense, and make a decision on whether to invest in the property or not. Okay. And then on the strategy side, I also work on things like product strategy, market strategy. How do you launch new product into new markets?
Sorry, what do you mean by products?
Yeah, so within co-working, we have a number of products. For example, the most basic one is Open Desk. People can basically pay like £300 per month, come to our office, sit anywhere in our office, wherever there's a desk and a chair. Then we also have Own Desk, where people pay a bit more, but they have their own desk in one of our office buildings. And with their own lockers that is fixed, that's always there, only they have access to that desk. And then there's also another product like Office, like private office, where a team of people or company can purchase and then have their fixed office. These are what I mean by products.
Okay, so am I right to summarize that your company, what you do is you look at different types of buildings out there and you probably target, those that are essentially just a shell. You come in, you renovate the buildings, you make it look amazing. And what you do is you sell different parts of that real estate, be it the different floors or different sections of the floors or even the entire buildings in different packages and different types of products to different companies and corporate businesses, is it?
Exactly. That's exactly what it is.
So your company still owns the entire building, right? You don't sell it.
So unlike WeWork, which you probably all know, they mainly leases the building. We acquire most of our buildings, so we own it outright. And we do some leases, but not much. So that way we can de-risk ourselves, because in the future we can always resell the properties for capital gain profits as well. So we're not only committed to a lease obligations, and also the interest payment is always lower than lease payments, like rent. That way we can save ourselves from downturn as well. But nowadays we also work with landlords, help them fit out the space, build out co-working space, and operate it for them. So in the form of joint ventures and management agreements. So that's what I do.
So kind of like a management as a service.
Exactly. So it's a wide range of things. Yeah.
With COVID, what's the future of co-working space? Is it going to be existence anymore?
Of course. And I think this is exactly why, COVID kind of amplified the importance of flexibility. Normally, in the UK, when you commit to a lease, you're committing for 10 to 20 years. And when COVID hit, you still have that lease obligations. You don't have the flexibility to opt out without paying a penalty. So that's where co-working steps in, We offer office spaces on a flexible term. It could be on a 6-month basis, on a yearly basis, on a pay-as-you-go basis, depending on what you choose. So we provide the ultimate flexibility for people. And also, remote working is not sustainable for everyone. It's not for everyone. Now that, a lot of people realize that they don't have a dedicated space to work. It's not a right environment. They get distracted at home. Home working is not for everyone, right? And so people will still need office space. They still need to come to office space. And I think the future is hybrid working rather than, completely working in the office or completely working at home. the future is that, you come to the office 2 to 3 days, still meeting the team, still retaining that culture, still, like having that social element of your work in the office. But at the same time, you have this flexibility to work from homes 3 times a week, for example, or 2 times a week.
Yeah.
And so
Yeah.
co-working will provide the solution for that. And it also saves the hustle of people having to fit out the space, having to manage the space, because that's what we do. We are expert at it so that businesses can, just focus on what they do best without even, having the hassle of managing the property. And our space is designed to a premium spec that, people just love to work at our space.
Yeah.
Okay, well, your bosses are going to be very happy for that. Next question is, who are your customers again? Are they just startups or are they even big corporates as well?
We position ourselves that targets large corporates, and we have a lot of large corporates. I don't know if I can name them, but for sure I can name one of them, Dropbox. Others, I'd keep it, confidential. But nowadays, they try to, have these nice looking offices to attract talents. They would go into this co-working space that is nicely fitted out to high specs, offer the right kind of working environments, because that's what we do best.
Having this job, right, does it help with your own personal property investment?
It does. I mean, real estate is not rocket science, but it does, give me the financial modeling skills. It does give me, the risk management, what exactly I have to look at, how do I evaluate a property. So it just gives me a more detailed picture, more colors into, what I have to think about when I, buy a property.
Okay, just look at your competitors. Who would be your competitors then? Is it a WeWork?
WeWork is our competitor, and there's in London there's also this office space called the Office Group. They are owned by Blackstone. You probably know them, a huge private equity firm. Probably.
So you're saying that large corporates have traditionally been going to these, traditional landlords and renting off, 10 years worth of working space, and now you're offering this more flexible product. And that's your selling point, is it?
Exactly. Yeah, 10 years is the minimum. But then most of the leases are 15 to 20 years. There's always vacant space in the building. Whereas here, we break it down into smaller offices where people can flexibly, scale up and down over time. So they're not fixed to a big space.
How do you manage that then? So as a traditional landlord, I don't need to manage anything simply because, I know this company is going to be in my building for the next 10 years. I'll probably just do some fixing and some maintenance work here and there. It's relatively hands-off. How do you manage, the changing capacity and occupancy and people moving in, moving out, given the flexibility of the product that you're offering?
Yeah, we operate as an investor, but also as a normal operator of just like any kind of businesses. So we have different teams. We have sales and marketing. We have operational team. We have concierge team that handles everything. We have a facility management team. We have a experience team that's responsible for people's experience. We have data analytics team. Just like how you operate a normal business, that our business is run in the same way. So we're not just a traditional real estate investors, and I think that real estate is being transformed into a product business rather than just bricks and mortars. And that's what makes it so interesting. And real estate is being consumed in a very different fashion these days. And I do think that people who are stuck in the old mindset will be left behind if they don't adapt, especially with the rise of, various prop tech at the moment. People care more about the experience. The millennials now, are in the paradox of choice. They have a lot of choice, a lot of money to spend. Their living standards increase. People will go for experience, for the more luxury stuff, rather than just basic needs.
What does one need to do to bring this model back to Vietnam?
I think this model in Vietnam, it also requires a change of consumer behavior. The reason why I think this model currently is not working well, but it might change in the future, is that leases traditionally are already offered on a flexible term. So unlike UK, where lease obligation is normally 10 to 20 years, in Vietnam, when you rent an office building, you probably sign it up on a monthly basis.
Yeah,
it has that flexibility, and also that won't work. But the selling point of co-working here, and those who can position themselves that way, I think will win the market, is that it's all about the experience. It's the customer journey. It's the story that you tell the customers. It's the story about, the moments that you enter the building to how, you go up to your office. It's this whole experiential element of the building that sells, just like how you sell normal products. So you have to get into that mindset. And I think that's what, will sell to customers in Vietnam. To be honest, I don't interact with many people who work in this space in Vietnam, but that's just my personal opinion on it.
And when you say experience here, is it simply due to the investment in the technology that you put in, the interior design? Or is there more to this?
So it's a lot to do with technology, I agree. It's also a lot about the service that you offer in the building, like the concierge, so basically you're converting hotels into workspace. It's like think of Sheraton, or Marriott. But instead of selling rooms, you're selling workspace. But you offer this service, you offer the service that cater for people just like how you'd cater them in hotel. So that's, the experience that I'm talking about. It's also about the design, how you place things in the office that you walk customers throughout the journey, make them feel home, make them feel hassle-free as they work in this environment and actually enjoy it. It's these, community that you're building as well that adds to the experience. It's also, the catering, the food and catering that adds to the experience. It's these events that you hold, the tech talks, or, adds to the experience. So there's a lot into it.
That's an interesting point, because I worked in a startup in London it was a secondment a couple of years ago. And, we were in this co-working space as well. And they emphasize a lot on the community. So, imagine like a startup, you probably have, depending on the size, but my startup then, they had around 7 to 8 people only. And there was this real need to talk and socialize and to communicate with other startups working in the same space. And they hold a lot of these events internally. You can come in, you have food, and you just talk to other people, understand more about what products they're trying to do, what problems they're trying to solve, and what disruptive technology that they're working on. So super interesting. So I think that's, I agree with that point.
Yeah, I was just gonna say, maybe in Vietnam, this space is more common for startups and for small companies, right? This co-working space, because if what you said is true, where you can have flexible lease, then maybe in the future, big corporations will make use of this co-working space more.
Yeah. And also, the selling point for corporates, even like in Vietnam, I think, is to have this ability to provide hub and spokes kind of model, this satellite office around the country to increase the flexibility that they offer for their employees. Because, now remote working is becoming a trend, right? Probably also in Vietnam. It's soon, going to be a thing in Vietnam. This is also a way for them to attract talents by offering, the best working environments, more convenient in terms of locations, offering different hubs around the country so that people can conveniently go to work, give them more flexibility. I think is the future.
Yeah. I think it's going to grow with the increase in talent in the country, because listening to a lot of podcasts about the Vietnamese market, one of the biggest issues at the moment is the lack of talent and the lack of skills in the country. But with more skills, you see, more talent and skills in other non-traditional cities that you wouldn't necessarily associate with business. For example, not the Hanoi, not the Ho Chi Minh City, but more of like the Da Nangs, the Hues, when there are more of that skill set and more source of talent in those areas, then that's when these companies will need to consider having offices in those places as well. And those offices will probably need to be relatively flexible in terms of leasing.
Agree.
Okay, so you have a side project, Andy.
Oh yeah, correct.
What's going on with this side project? Can you explain it to everyone?
So I'm currently working on this side project where I helped a VC in New York to build out their investment syndicate arms. Yeah, it's just that through connection, I know this partner of a VC fund in New York, and suddenly one day he reached out to me and said he has this very cool side hustle and he thinks that I'd be the right fit for it. So whether I'd be interested, and I just said yes. It's great for my learning development. So yeah, so I just accepted the offer. And first, what venture capital means, venture capital investing is basically you are investing in these high growth startup companies. There are different stages of startups that you could invest in. So you could invest it in from the very early phase when it's just an idea, or in startups that already have a product, or startup that are in the growth mode, or startups that are more established. And so where I focus on is more of like the seed and pre-seed stage, and as well as Series A.
So it's kind of like Shark Tank in Vietnam, isn't it? So can you explain the process of the investment raising steps?
Raising fund for a startup, you might start off, especially when the startup has no credibility yet. You don't have a product yet. You only have an idea. Most founders use their own money and also raise money from family and friends. And these are called like seed investments. People would invest into the ideas, into the people of the startups. Then you move up to Series A. There could be a bridge in between where, a bridge financing round in between seed and Series A, where you give the startups more funding so that it could get to a stage where it's qualified for Series A. Series A is when the startup has reached around $1 million in annual recurring revenue or $1.5 million in annual recurring revenue. By now, investors would already see a product market fit for the product and for the startup. The valuation in this round is usually $20 to $40 million, and the round size is usually $10 to $15 million. So this is when startups have hit the criteria to raise a Series A funding. There's a strong team, investors would see a clear reason of why now is the time, for this particular product, for this particular market. And there's a large addressable market for the product. And they could see a potential for it to grow and succeed. So this is when Series A is raised. Then you move on to, like different series. There are different like targets that you have to meet in order to, go to the next round, like Series B, Series C, Series D. Different financial targets as well as operational targets that you have to meet in order to get to those funding rounds.
Yep. And then the last funding round will probably be IPO, is it?
Yeah, so the way how, you could exit a startup investment, or, how startup could exit themselves, it would be IPO, or it could be acquired by another company.
Can you explain IPO?
So an IPO is when a company go public. So, these stocks that you trade on the markets, IPO is the process where private companies, where they're not traded on a publicly, you cannot buy their shares. Only private investors like private equity or venture capital can buy into these companies. In an IPO, they go public and their shares are available for public investors like us to invest in. And that's what really an IPO is, like going public on a public exchange.
At what point in that process is the hunting ground for a VC then?
Venture capital is a high risk and high return kind of like business. So it could be anything really. Venture capital could go in from like the very early stage, like seed stage, depending on the strategy of the VC fund really, and the risk appetite and, where the expertise lies, of the general partners. They could invest, right from the start, just in the ideas. They could invest in Series A. But obviously, the earlier they invest, the higher returns they get, but also more risky. And they could invest even like all the way through to Series D, Series E, the growth stage of the firm, growth private equity, they call it, where venture capital money would put their money in very late. In terms of the funding rounds, it could be like just before IPO. I know a lot of them that like put money just before IPO, and then the company get IPO'd and they exit the investments. So it really depends on the strategy of that particular venture capital firm.
So how does a venture capital firm find a candidate?
So it really depends on a lot of criteria. Mainly, people find these deals through network, and that's what I think is amazing about VC. You get to build this large network with different investors, different founders, which can be very valuable. And once they found through network, they get referred to this startup. When they come across an interesting investments, they would evaluate it from, depending on where the stage of the company is, they would assess different things like the financials, or, very early, they just assess the founders. They mainly, like see whether the founders has potential. So there's a lot of EQ here, like to get to know the founders, the EQ elements, the emotional intelligence elements, where they have to assess the potential of the teams, assess their vision, see if, like the startups and, and the VC fund are aligned in terms of how they want to grow the business, their vision for the future of a particular product. And yeah, so there's a lot of human elements in investing in VC. A lot of it is about people. It's less so about financials because it's like finger in the air. The startups are usually too early to assess, like their potential performance. So what you're really assessing is the potential of the market, whether, like the product has a potential to scale to something big. Or and the interesting thing about like VC investments is the non-linear growth curve. And what I mean by that is that, when you put a pound of investment or 1 hour of your time or 1 unit of any kind of resource, the output could return you more than the same unit of input. And so you look for these startups where, it has this potential of non-linear growth curve where it can scale up really quickly and really big. There's a huge market for it. And then you look at the founders, as I said, the team, to see whether they have the potential to take the startups to where it can be successful.
Yeah. And it's certainly booming with the advancement in technology, isn't it? But I guess you mentioned on risk there, and VCs are very risky. Normally, they would have a portfolio of companies that they're investing in, and I don't know how many of them will die. You lose all the investment, but you're hoping for that 1 or 2 to really, really do well.
Exactly. You're looking for that black swan event to happen. A black swan event is an event where, just that one single event can basically make it all.
So what's the difference between VC and gambling then?
So it's not simply gambling. There's a lot of, risk assessments here. There's a lot of analysis here that to be done on the company, a lot of, like market sizing, a lot of, like assessing the people. It's also a lot about like managing money, like how you go about it. It's not just simply putting your money blindly into an investment. Although I do know that many people, like many angel investors, just simply, like put money on multiple investments and just hoping, like having this blind hope that one will play out well. But it shouldn't be the way. You should really look into the company, do due diligence on it, and really just not follow the hype or follow the herd.
Mm-hmm.
You mentioned angel investor. How are they different to a VC?
So angel investors are individuals, like mainly high net worth individuals, who, like just individually, put their money into these startups. And there are these platforms like Angelists, or, like they could do it through their network, get to know the founders or get to know, the VC who invested in it, and then try to loop them into the investments and sign term sheets with the startups. But angel investors are basically these individuals who invest the startups in its very early stage.
Where do VC firms get money from? Is it like each partner has to contribute a certain amount of money?
Oh, no. So with VC, that could be the case. Well, like the partners can decide that they put money and then they could invest out of it. Then that would be more of like a family office where, they invest their own money. But VC funds, just like private equity funds, they also raise money from institutional investors, pension funds, investment banks.
Universities.
Yeah, universities, even high net worth individuals, billionaires put their money into VC funds from multiple sources.
Yeah, so probably... you can break it down into 2 ways, isn't it? Number one is you put your own money in and then you invest in all of these startups. And then, like I mentioned before, hoping for one of those in your portfolio to do very well and make you a very handsome return. Or alternatively, what you do is you tap into this pool of funds that other institutions just pour their money in, use that money, you grow your wealth, and then hopefully you can pay back that initial fund that you got it from that pool of resource. So why are you so keen on VCs, Andy?
Yeah, so as I said before, it's what makes VC so interesting is this concept of non-linear growth curve. And for most technology companies, the impact that are made by a team of 10 or even like just 5 engineers can be huge and even change the world. So unlike traditional industries like manufacturing or agriculture, where inputs may be equally reflecting the outputs, the tech industries, on the other hand, and I'm not saying that, VCs have to invest in like tech industry. They can also, invest in these other traditional industries as well. But a lot of them are like in tech. And tech is constantly changing. And this is where that I'm very interested in. The innovation curve in tech, in reality, is not an S curve, like how you're taught in school. But it's a multiple S curve stacking on top of one another, creating myriad of synergies, double exponential growth curve. And that's what makes it so exciting. Like seeing how these disruptive startups, these new ideas shaping our world at a rate that is never seen before. So, being directly involved into this process of changing the world, that's what gets me excited. And learning about different business model, different startups, having this wide knowledge and broad knowledge about different areas also really help with what I do it for, actually, because I can apply, solutions or problems that are in other industries and use the analogical thinking, problem solving thing to apply those practices in other industries and apply it in my own industries. There are a lot of ways to think about it. They're thinking outside the box.
So why don't other firms or other investment industries invest in startups then, like VCs? Another way to put it is, can you explain the role of private equities and investment banks?
So in short, investment banks are middlemen between those with money and those with ideas who need funding. In investment bank, the main front office divisions include M&A, sales and trading, and research. They are basically the divisions that generates revenue for the bank.
Isn't there IPO as well?
Then let me rephrase it. So not M&A, but capital markets. Yeah. So capital markets consist of M&A, IPOs, debt capital markets, and all these things. So in this division, the capital markets, just like in real estate, you have a broker and you want to buy a property. The broker would handle the transactions. And in M&A, you are basically replacing properties with companies, and investment banking are the middlemen that handle these transactions. Or, when companies want to raise money or raise funding, either it can be through debt or through equity, investment banks would help them. The capital market team, the capital market divisions would help them raise the money or handle the transaction process, the admin stuff that is related to the transactions. Mm-hmm. And then there's also these sales and trading side. The division is responsible for making the markets in stocks, bonds, and derivatives. And so within this division, there are salespeople, there are traders, and there are structurer. So salespeople work with asset managers, hedge funds, and insurance companies, and other buy-side investors to pitch their ideas to buy and sell securities or derivatives. These are like publicly traded stocks, for example, or publicly traded options, or like just basically securities that are publicly traded on the markets. And then traders would make the markets and execute the trades for these investors. So traders would have a trading book where he or she can take positions and place the trade for whoever wants to execute it for different investors. And so these traders would have to be really quick with mental math and have quantitative skills to understand different complex products. It's a complex world, and I don't work in trading, so a lot of it I don't really know, but I know what they do. So, and then there's also structuring where people structure very complex products where salespeople lack the expertise to effectively guide the clients. So these structuring teams would come in and develop expertise in complex products and pitch their area of expertise to clients, to the salespeople, so that they can again, pitch it to different clients. But there are a lot of it. But investment banking, in simple words, is just middleman between those with money and those with ideas who need the funding. Yeah. And then private equity are basically investment companies that invest in these established companies already. So unlike venture capital, where you're investing in like these high growth or startups mainly, there are different types of private equity. There are different strategy as well. There might be like private equities that focus on growth equity, meaning that they're also investing in these high growth companies, but their investment process tend to be different. So they tend to seek for companies that have established products, established financial track records that they can evaluate, a robust financial model to evaluate the returns. Whereas in VC is more about like investing in people and ideas, less about the numbers. And then there's also these buyout private equities where they invest in even more established companies, where they take a lot of leverage and invest into these established companies that have a long history and track records of business and products and markets.
Okay, so essentially, if I were to summarize, then VCs invest in high growth startups or smaller companies that do not necessarily have a historical track record, but are mainly based on their ideas and their people, and they tend to be disruptive. They will provide very high returns, but also very high risks. Private equities, slightly the opposite to that. So they sometimes do invest in startups, but most of the time they invest in established companies that have probably relatively lower returns, but also lower risks. Am I right to say that?
Yeah.
And then investment banks are not really in the same category because sometimes they do invest, but most of the time their services are around being the middlemen, providing financial and banking services for different transactions or trades, etc.
Exactly.
Let me walk through an example here. If I was a startup, right, I have some ideas in my head right now. I will take money from my mom, all right, seed money, develop my team of very disruptive people, engineers in the tech industry, right?
What's your product, Long? Are you making like the I don't know, the best speaker in the world that can translate so many different languages?
Let's just say I have a random product about music. Okay, so there's an app. Okay, it's always an app. And in this app, you click something, and then some music pops up in your head. Hypothetical product, and it's a bomb. It's a great product. I approach a VC firm, right? I need to make connections with them. They'll give me a bunch of money. I grow my company, and then they said, "This is good growth. I'm out. I'm gonna sell your shares of companies to the next investor." Let's say it's a private equity, so I'm established now. Right? Is that the flow of events?
Yeah.
So private equity takes over my firm, give me more money. I grow it more. And once I become so big, like Amazon, right? I go IPO. That's when I get an investment bank to help me with transacting this IPO, making it happen.
Mm-hmm.
And then the ownership transfer from the private equity to the public, and I become Jeff Bezos.
Mm-hmm.
Yes. And then also, it does not necessarily means that, like the private equity would fully exit their investments. They might decide to retain some of their stake in the company, right?
Yeah.
They could sell out a proportion of their stake to the public, for example. So that could be the case as well. It does not necessarily means that, like they would fully exit their investments, transfer the complete ownership to the public markets.
Mm-hmm. And Long, when you become the top dog in the market through your IPO, that's when you can acquire Spotify and other companies as well. So that's when you need an investment bank to come in to help with your M&A activities. Okay, interesting. So for someone in Vietnam, are these industries developed in Vietnam?
So all of these industries are present in Vietnam, and their functions are basically the same as anywhere across the world. It's just that with things like private equity, for example,
Mm-hmm.
those private equities who take on a lot of leverage to buy out a company,
Mm-hmm.
the legal structure is not established for that yet, because it's a high risk kind of like investment to make. So we see that less or, non-existent in Vietnam. But we still do see a lot of like investment banks are present in Vietnam. We do see venture capital being a big thing, especially with the rise of a lot of new startups now in Vietnam. Growth private equity are also, very common in Vietnam, that invest in companies at its growth stage with proven products, proven markets.
Mm-hmm.
So yeah, you see all of these in Vietnam the same way how you see it here.
Am I right to say that in Vietnam it's because, the number of established companies aren't as high as compared to developed markets like in the UK or the US, and that's why you probably see a surge in VCs rather than in private equities?
I think it's two different markets. Obviously, in Vietnam, there are still a lot of established companies, and you do see a lot of like private equity investments. With private equity investments that takes on a lot of leverage, then there needs to be a legal structure or a regulatory framework in place to protect investors and also protect the companies as well. So, and I think Vietnam is not there yet for these kind of like investments, but for established companies, I do still see private equity buying it, but mainly with equities rather than taking on a lot of leverage.
The startup community in Vietnam is huge, so makes sense that VCs will be more interested.
Yeah. It's just the two different markets, and I wouldn't want to overlapping them. But yeah, you do see a lot of like VC. You do see a lot of like startups funding rounds in Vietnam. A lot of like startups booming. A lot of them are just startups with no future. But you also see a lot of good ones.
Before this podcast, right? These are all big words to me. VCs, private equity, investment banker.
Well, I'm glad that you're you're learning, Long.
No, honestly, I thought they were, these are big guys, all right, they earn a lot of money. No, okay, they're just investors. Okay, I do invest too,
Yeah,
Yeah,
there you go. You're a VC. The Long Fam VC. Okay, so what about the concept of hedge funds then, Andy? What are hedge funds?
It's also a pool of investments. The limited partners that invest into these funds being these institutions like pension funds, investment banks, high net worth individuals, but they make extensive use of more complex trading and portfolio construction and risk management techniques to
That's a lot of big words.
to basically make profits out of it. So they trade more rather than they invest long term. They make a lot of short-term trades and short-term profits, but this is what they're good at. So they have the knowledge and expertise to do it. I think one way that make a big distinction between hedge fund and any other types of investments is that hedge fund can take short selling positions. And then going back to that concept of short selling. So
No, let me give an example. I want to understand from what you're saying.
okay,
So Hill has an iMac, right? And I want to borrow Hill's iMac to sell on eBay for £1,000.
exactly.
Okay.
Yeah.
I'll do that now. I say, Hill, I'll give you £10 for your inconvenience. You cannot edit your photos. Too bad. Okay, here's your £10. Let me take your iMac. I sell it for 1,000.
Yeah.
And then somehow I find someone else with the same iMac spec that I can buy for £800.
Exactly.
Then I buy that and I give it back to Hill.
Exactly.
Hill now has the same position. Hill has the same iMac with £10 of inconvenience fee. And I have my £200 difference.
Exactly. That's how it works. And if the price goes up by £10, say from 1,000 to £10, because you only gave him the £10 guarantee, right?
Yeah.
He would want immediately shut off and claim the iMac back, because he doesn't want to expose to, if the price goes up more, he would lose more.
Yeah.
Yeah,
So,
yeah.
I mean, but as long as I get my iMac back at a particular date, as
Exactly.
we've agreed, and I get the £10, I'm completely fine with that. Yeah.
Yeah.
That's a great analogy. Thank you, Long.
Oh, I can short sell now. Thank you, guys. But why do you say only hedge funds can short sell? Because I can short sell.
I know individuals can short sell too, but just I'm talking about from the institutional investors' perspective.
Yeah.
Hedge funds are usually the ones that place short sell orders or more complex kind of trading strategies, rather than the long-term investors like private equity, venture capital. They tend to invest in long-term rather than making these complex short-term trades executions.
Because short sellers tends to be short term, right?
Exactly. Yeah.
So the assets that you would typically deal with when you're doing short selling are assets that are falling in value.
That you think would be falling in value, but it could go up, right? And if it goes up, then you lose the money.
Yeah. So what are those assets? So companies that are no longer fit for the future.
Oh, it's usually the stocks in the market.
Yeah. Like high street retail.
Yeah, it could be the stocks of high street retail where you think the value drops significantly, so you place a short sell order in the hope that the stocks will fall and you pocket the difference.
Yeah, and for those who are wondering why I said that, is because of the rise of e-commerce, so on and so forth. People are using the internet to purchase a lot of items, and high street retail don't necessarily do well as they did before. Okay, let's move on then. Thanks for clarifying all of those different job areas and industries, Andy. How does one get into these careers? What are the skills needed, do you think? Let's start general first, and then maybe we can hone into each type of career.
So these days, what I think is that the job market is pretty flexible. People from various backgrounds, unrelated backgrounds, can still go into finance as long as they have a passion for it. I know a lot of people majoring in history at university, or language at university, or geography, can still start off a career in investment banking, or these in finance. All you need to have is show that you have a willingness to learn, you have a passion for for finance, and you have that mindset, or you have that natural skill set, the thinking, in order to perform in this job. So for example, if you want to have a career in trading, normally they're looking for people that are quick, who can think fast, on the spot, who are good with mental maths, these sort of things. So but you don't really have to study a certain a related subject area to finance in order to start a career in finance.
Are there any certain prerequisite steps in your careers that you need to take before you enter things like VCs, private equities, investment banks? So, internships, or doing something related, let's say doing, I don't know, some sort of financial modeling career before?
Yeah, so I think that's a good thing to have. And I think that would increase your chance of getting a job in finance by having these internships before you actually go into a full-time role. But I mean, if you have a compelling story to tell of how you want to transition from one career to another or one area of expertise to another, then definitely if you have a compelling story, that will sell and people will hire you. And if you have a talent, you have a mindset for it, then obviously people will hire you. But obviously having these internships which demonstrate that you're passionate about this particular sector, particular area, and doing stuff like on the side personally. If you want to go into trading, for example, you might also have a personal hobby of trading.
Is that what you're planning to do?
I think now being a trader full time is definitely a good dream, right?
Yeah. It's just that you have to show that you're curious and you're passionate about a particular area. Internship is just a good way of like demonstrating it, but it's not the only way.
And I mean, all of these areas that we've talked about, investment banking, private equity, VCs, hedge funds, so on and so forth, we all know that they pay relatively well. However, they are also very picky and they have every reason to be picky. How do you differentiate yourself then?
Well, it comes to both your technical capabilities as well as your personality, right? So technical capabilities means that, you perform well on like these technical assessments and you get top scores on these technical assessments compared to other candidates, and then you would outcompete them. But a lot of it is also about the personality. When interviewer, you're a good fit for their company's culture, your personality is a good fit for the job, you would get along well with the team, then they would hire you. But I think more of it is about how you sell your stories, your personal brand.
And good point, you talked about culture there. I think there is quite a varying degree in terms of culture, right?
Exactly.
If you're talking about investment banks, the word on the street is, it's pretty clear anyway. It's a very cutthroat culture. It's very intense. It's very long hours, just do your job and get it done with. I'm not sure if that's still the case or there's been strides to change that culture, but it's always been very much intertwined with investment banking. What's the VC culture like?
Oh, VC is more entrepreneurial. People there are like super relaxed.
Are they?
Yeah, they're very like the people that I know, at least, even like the partner that I'm currently working for,
with millions of pounds at stake because it's so high risk. Are you sure?
Yeah, but work hard, play hard, right? And it's the culture in VC, and people are super down to earth. Obviously, when you invest a large stake of money, you have to be very diligent in terms of know where you're putting your money into. But the mindset is just so much more entrepreneurial, and that's how these VC guys get along really well with these entrepreneurs, with these like founders.
Yeah.
So there are less hierarchy in VCs, I'd say. People are more down to earth, like based on my own personal experience and interactions with people in various industries. Yeah.
Okay.
They're more like a cool guys.
If you could give like a tip to someone who's trying to get into this investing career, either applying for a job or just, finding out more about this, what would you tell them?
I think, like with any career, you have to be passionate about it. You have to, know that, you would enjoy it. And my tip for, people would be find a career that you enjoy, know what you want in life, figure it out as soon as possible, and then align your career with your purpose and, what is it that you want to achieve in life. And it's more important than, than trying to get a career that makes money, but, that doesn't bring you happiness. So, and then just prepare yourself well. And because if you're passionate about a particular area, you would for sure, read up on it. You'll be super curious about it. For sure, you will do well in interviews. And it's quite obvious for interviewer to see, candidates who are genuinely curious about, like a particular sector, genuinely passionate about it. Because it shows a lot about, what they do outside of their work or, outside of their uni. And it's just become very apparent. So it's important to pick something that you are passionate, that you like.
Okay, cool. Let's move on to the future of investing. So what's the future of investing, Andy? Is it crypto?
So I would say, for the future of investing, these traditional assets like stocks, bonds, real estate are going to be here to stay, they're not going to disappear. But these days we see more alternative asset classes rising. Like cryptocurrencies, NFTs. And I think, these will be potentially a new asset classes that people will be very interested in. I wouldn't say that this would be the future of investing because anything can be a future of investing. It'll be a future of investing for me, but it might not be a future of investing for you, right?
You're certainly holding back on your wording for this podcast. I don't think you sound like that when we talk one-on-one. But okay, let's talk about cryptocurrency then, because I'm sure, in this part of the podcast, a lot of people are going to click on it because I'm going to make it very apparent in the thumbnail with a big Bitcoin logo so that you guys are clicking on it. Okay, so what is Bitcoin? Or if you want, you can start with what is blockchain?
Why don't I start with my understanding of blockchain, Andy? Maybe you will correct me. All right?
Okay, cool.
I'm new to this world. In a sense, I understand blockchain as solving a trust issues, right? Cutting out the middleman. For example, like blockchain is recording information and verifying certain information is true, right? So if you're selling a house, you want to verify that all these costs have been paid for, verify the ownership, all the problems with that house. So in the process, you have to employ so many different third parties, putting trust in them to do the work, to verify so that you could buy. But with blockchain, ultimately, you could just see the house information on this blockchain technology, see that all of the necessary information has been done, all the necessary checks have been done. You can trust that and just buy the house, transfer the money. That's it. It's much more efficient, quicker, faster, cutting out a middleman. Even transferring money within banks takes days if it's through so many countries. But with transferring Bitcoin, for example, it takes much faster time. So that's my understanding of that.
Yeah, and so I think you're completely, on point over there in explaining what blockchain really is in simplistic term. It's basically just a system with blocks of historical transactions data that are chained together, encrypted in such way that, people cannot hack it, cannot change it. It's immutable.
Yeah.
It establishes this trust in the system.
Yeah.
That's the whole purpose.
Okay, and I want to jump in here. I want to ask this question because, every single YouTube video, every single article that I read online about blockchain, about Bitcoin, they throw in words such as security, immutable, distributed ledger, public, so on and so forth. It's just the generic terms and description terms that everyone throws in to explain blockchain and Bitcoin. How do you know these things? How do you know these things when you're buying a Bitcoin that, it's actually really, really distributed? It's truly, truly public. Do you know, or are you just reading things off online and then you're convincing yourself that?
No, they are. So there is basically a website where, you can look at, all the transactions are recorded and, it's displayed on there.
But the thing is, that's the problem. Like, how do you know? Because Bitcoin is supposed to be distributed. No one owns Bitcoin, right? This guy comes up with the technology. It's pieced together by all of the computers that are involved in this network to validate the transactions. You own a computer as well, Andy. But then there are thousands and even millions of computers distributed worldwide, mainly in China, I believe. And they're trying to solve all of these problems to validate all of these transactions, and they get, connected in this blockchain. How do you know? No one sits in the middle. Like, there's not a single proper website that tells you that this is the real thing. You're finding it in some random website. How do you know if that website is correct? I can create it from Squarespace and I can just put in random lines that tells you that this transaction happened. How do you know? Or are we all just jumping on a bandwagon, spitting out and regurgitating the same content to one another about this technology?
Yeah, so there are actually, data that tells you or shows you the mining power of these Bitcoins. How is it distributed across the globe? So in China, for example, 60% of Bitcoin mining or transaction verification activities are taking place in China and dominated by only a very few companies. It's true that, this whole process is pretty centralized, right?
Wait, what?
It's pretty centralized. Huh?
I thought it's decentralized.
Centralized in China, you mean?
It is a decentralized kind of system. But when you think about it, over 60% of the mining power comes from only a very few companies in China, right? Because electricity is cheap there. And basically, you are using this electricity to solve these mathematical puzzles of blockchain to verify transactions. One way to think about it, you could say that, you arguably, it seems pretty centralized in China. But Satoshi, the creator of blockchain, and no one knows who he is or, where he is, But he built this incentive mechanism such that it is in the miners' best interest to not attack the system, because even if they were to collude, assuming that the miners are rational, the cost of attacking the system is so much more than the benefits that they could get out of it. And so, these whole mechanism, the incentive mechanism is built in such that, it doesn't matter. The controlling power of, those who mine the Bitcoins are only concentrated only a few, but, there's little incentives for them to cheat the system. And I think that's important.
And what are the incentives?
The cost of attack is directly related to how much hash power the attacker owns. And these hash power is basically the electricity power that they have that solve these puzzles to verify the transactions. There was a paper that it was posted on coindesk.com, and it says that in order to control 51% of the hash power, CPU power, to solve these complicated puzzles to verify transactions, it'll be worth around 335,000 Bitcoins. And that's equivalent to $17 billion at current price. Like, who would risk that money to cheat the system, right?
Can I ask you something? Why do they want to cheat the system?
Exactly. Why would they want to cheat the system in place? People would cheat the system in order they could find a way to profit more from cheating the system. But because the incentive mechanism that is in place for blockchain and for Bitcoin specifically, it's acting in a way such that the cost of cheating the system for you to gain the profit for yourself is just not worth it.
So an example, I want to sell a house, right? But this house is not owned by me. But I want to record on this blockchain that it's owned by me. So I go to some miners in China. I said, hey, can you just cheat the system and say that it's owned by me? And you're saying that it's costly for them to do that rather than just mining them truthfully and verifying the data truthfully.
So for example, if you don't own a lot of hashing power or like the electricity power to verify these transactions, once you cheat the system, you do any modification to the blockchain, it would appear on the system. Every computer around the world would get notified. Yeah, because it's on a consensus mechanism, right? So in order for you to cheat the system, you have to win 51% of the vote. In order to win that 51% of the vote, you need to control 51% of the power to verify these transactions.
Okay.
Yeah.
Well, look. I don't think this is probably the best place to talk about this in great detail because I've got a million questions. And I think we need a dedicated podcast to talk specifically about Bitcoin and blockchain as a whole. But there are so many holes at the moment and so many questions. And don't get me wrong, guys. I invested in Bitcoin, or I think the better word to use is I gambled on Bitcoin in 2016. So I have a stake in it as well. And I'm happy that it's growing at the moment. But fundamentally, deep down, I have so many questions that I just don't understand. And it boils down to the fact that to what extent do you start to invest and put your money into something until you really, really do know the ins and outs of it? I think it's easy for us to say that you have to know everything about it and you need to know like the back of your hand before you put your money into it. But at other times, sometimes you don't have the energy, the time, the effort, and even the mental capacity to know every single thing before you decide to put money into it. I think that's probably the takeaway for me when it comes to blockchain. Because I'm not going to say and not going to sit here and say, I know everything about it. And I'm pretty sure if I ask Andy my millions of questions, he's probably not going to be able to answer every single question as well. What do you guys think?
Yeah, so I think it's with every investment, right? There's always hidden information or, a lack of information out there. Even when you invest in like stocks, for example. Mm-hmm. There's always this level of risk where, you don't have the full information in the markets. Mm-hmm. And there are a lot of like reading that you can do on blockchain, a lot of reading that you can do on Bitcoin, Ethereum, all these cryptocurrencies. Mm-hmm. But it boils down to your risk appetite. At what point, are you willing to risk your money? How much information do you need to know in order for you to be comfortable with risking all of your money to invest in something that could potentially yield you multiple X returns? Mm-hmm. So it's really depends on like the individual's risk appetite.
Yeah. And to what extent do you think putting money on Bitcoin at the moment and different cryptocurrencies is a form of gambling?
I think it would be gambling. The definition of gambling on Bitcoin for me is like, if you just follow the herd, do no reading, like just hear what other people say, follow the hype, and just put money into it with a 50% chance in your head that like it could play out well or it could not play out well.
Well, for example, for me now at the moment, Andy, I've read about it. I roughly know what it is. I don't know it in a lot of detail. I'm putting money in it. Is it gambling?
The question you have to ask yourself is like, where do you see the potential of Bitcoin? What do you think, it could play out? And, like, why are you investing it in the first place? And, being able to answer these questions in detail would, like deviate yourself away from gambling.
What is the potential of Bitcoin then? It's not going to be a form of money transaction because it's too costly. What is the potential? Why are people putting money in Bitcoin?
So people view Bitcoin as a store of value, just like gold.
Why don't you buy gold then? Why don't you go out to a jewelry shop and buy gold? Why aren't we? I'm not attacking you specifically, but I'm asking about our generation and anyone who's buying Bitcoin at the moment. The number one response that I always get is exactly what you said. It's a store of value. It's the same as gold. Why aren't we going out to the stores and buying gold instead if we really believe in this store of value concept?
Firstly, storing gold can be costly, right? You just don't have the storage for it, and it's not secure. Storing gold in your house, like any theft could ramp into your house, steal all of these gold. It's not secured. It's not safe. With Bitcoin, everything is stored safely online. You can store it on your hard wallet, which is basically a ledger.
To what extent do you think it's safe? Because there are so many instances and stories and cases of Bitcoin hacks in all sorts of exchanges and platforms.
Exactly. So if you store your Bitcoin on exchange, you're effectively not owning Bitcoin. It's just like purchasing gold. But if you buy Bitcoin on these exchange and then transfer these Bitcoin into your hard wallet, which is basically these USB sticks where you actually store your Bitcoin in there, then it's impossible for people to hack this little USB thing, the ledger, unless they know your passcode. And there are a lot of ways that you can protect this passcode for yourself. It's like putting your money in the safe.
What if they go in and they take the USB off of you?
If I lose this USB stick, as long as I have the passcode, I can restore it in another hard wallet. That's what's interesting about it, right?
Okay.
So, if you lose this hard wallet, you lose this USB stick, not necessarily that you're losing all of your Bitcoin. As long as you have this passcode stored in your mind somewhere, or it's protected somewhere, in a bank safe, or there are different ways that you can protect this passcode. And
okay, so now we're bringing in the middleman to protect the passcode that's going to protect your Bitcoin. That is supposedly not supposed to go through a middleman. No one's going to remember the passcode, right? 100%, because I used to have one as well. Ended up not remembering it at all, and then I transferred it out before I forget, because there's just no chance you're going to remember this random long ass passcode. What I'm saying is, I don't understand the selling point of Bitcoin versus gold at the moment. It's not strong enough. I think why people like us are jumping on Bitcoin is just because it's trendy. But we're not thinking about gold when, if our argument is store value, then it becomes applicable to gold as well. Shouldn't we take our money out of Bitcoin and buy gold instead, if that's our argument?
Is it also scarcity? Bitcoin is scarce, right?
But gold is scarce.
No.
That's why gold is so valuable, isn't it?
Exactly. Gold is also scarce, and it's this concept of scarcity that makes things, like valuable, like store value. But with Bitcoin, it's easy to transfer, right? It's easy to transfer. For example, it's harder to transfer like a full warehouse of gold to another person.
Why are you transferring?
For example, if you want to transfer your wealth, right, to your son, for example, or you want to pass this on to someone else, then facilitating the transaction digitally is more convenient, right?
At what point in your life do you really need to do that? That's probably when you're going to die or something. If you're storing it for wealth, you'll just put it in one place and that's it.
Okay, or let's say, in the future, you have 2 bars of gold. You still want to keep like 1.5 bar, and you want to sell out, like half a bar of gold, to get back your money in the future at some point when you don't want to keep that wealth forever. With gold, you cannot break the physical bar of gold down to cut it in half and then just give it to someone, right? You can't do it yourself. But with Bitcoins, there's you can sell it in like a fractions of 0.0000001 Bitcoins.
Look, I get that, yeah? When you're buying gold, you're not really, unless you're a commodity trader, you're not buying gold to just like send it left, right, and center across the world to people, right? You're buying it to store value. Same for Bitcoin, because when you're transferring Bitcoin, you lose a lot. Like, it's very expensive to transfer Bitcoin. It's not cheap at all. That's why Bitcoin cannot be a currency. So I don't get this argument. I want you to help me to understand, because I buy Bitcoin, but sometimes I don't even understand why I have it, because I think it's trendy. Why are we not buying gold instead? Unless there is a much more compelling argument saying that Bitcoin offers something else rather than just store value.
Yeah, so what I'm saying is that Bitcoin is sellable across space and across scales because the asset is digitalized. For example, if you hold 2 bars of gold now, for some reason, you have to pull your money out, like pull a portion of it, a small portion of it, like say a quarter of a bar, the value that is equivalent to a quarter of a bar out. You cannot do that with gold, right? You cannot easily do that. But with Bitcoin, you can break down into small fractional Bitcoins.
How much value does that give you? Like you're able, look, first of all, the assumption here is you're talking about in terms of bars of gold.
Yeah.
I can talk about in ounces of gold, which is like broken down in so many different jewelry pieces, right? I think that's not a very compelling angle to look at it. And once again, the whole point of store value is you're keeping it. You keep it in large amounts and you're retaining the value. Then the amount of transactions you're going to make on those assets are supposed to be very low. Otherwise, you won't buy gold or you won't buy Bitcoin. You buy US dollars instead.
Yeah, but then you have to look at it as, you have to look at all of these factors combined. You cannot, isolate them and dissect them and look at individually. So with digital coins, not only that it's sellable in space, sellable across time, sellable, like across scale, it's also, saves you the money that you have to store your gold and then build in a security system to protect your gold. It's just more hassle-free to own these digitalized Bitcoin on your hard wallets. Don't you think? It's all of these combines that, create a big value, not dissecting these individual factors and then, just try to rationalize yourself that, it doesn't add much value. It doesn't add much value on its own, but all of these factors, together adds a lot of value. All of these benefits associated with owning Bitcoins add so much value compared to gold.
To be honest, I think that people are on Bitcoin at the moment. It's not because of this store value bullshit. It's what they're telling themselves in order to buy and start buying Bitcoin, but they're going in just so that they get the appreciation in value and then they make money out of it. This store of value argument is so bullshit.
No, I agree. I agree that there are a lot of speculators out there, but it's just that the potential that it can be a store of value is high, right? Like it has all the characteristics to become a good store of value. And plus it can be digitalized.
With the value fluctuating like that.
And the reason why value is fluctuating at the moment, it's because there's not mass adoption yet. Only few large institutions are owning Bitcoin. But when the whole world start to adopt Bitcoins, the value fluctuation is also much less. As you see now, earlier days of Bitcoin back in 2017, you see that the fluctuations in price was much larger than now.
What's stopping you from buying a different cryptocurrency that has the same properties and characteristics? For example, rarity, scarcity, so on and so forth. Same on the blockchain. Isn't that just a gold 2.0 then in this case?
Yeah, if you can find, another cryptocurrency that is decentralized like Bitcoin, then sure.
Yeah, Ethereum.
No, it's Ethereum is not decentralized. It's completely centralized. There's a team of developers that is controlling the development of Ethereum. With Bitcoin, the ownership is like no one knows who the founders of Bitcoin is anymore. He's completely vanished, and there's no entity or no group of people that are controlling, the system. It's the first cryptocurrency to be completely decentralized in terms of the ownership of the system.
So you're saying Bitcoin is the only cryptocurrency without a team?
So who's maintaining the system then?
So it's various developers around the world, and then these developers would when they want to change something in the system, they would have to come to a common consensus. It's a voting system. It's decentralized. Everyone has a power. It's democratic.
Are you participating in that democracy?
No.
Yeah, why not?
Because I'm not a developer myself. I don't have the skills to.
What's incentivizing someone to jump in and participate in this democracy?
Well, it's not monetary, which is good. People are not doing it for monetary value. People are doing it as their own goodwill, I'd say. They want to help to improve the system. They want to help to improve, the future of finance, or they're just doing it out of courtesy. They're not getting paid for it. These developers, they're not getting paid for participating in developing this whole system.
So many questions that I have, and they're all unanswered. If there's no monetary incentive, then that means that this is a very closed group of people. Then that goes back to your point of it being centralized. Another question I have is, what's stopping someone from creating the same Bitcoin network and then vanishing? That's your Go 2.0, isn't it?
I'm not saying that, there's no chance of it happening.
The thing is gold, and you can't create Go 2.0 in real life. Why are we not putting money into something that is truly, truly scarce and cannot be replicated?
Gold is being replicated by Bitcoin at the moment, right? If you think it that way, it's being replicated because it has the same kind of like it has the same features, it has the same function. But so far we have not seen we've not seen a replica of Bitcoin.
Is gold scarce? Are you sure it's you can still mine gold now, right? So.
Exactly, but you can mine gold, but the supply rate is slow.
Same with Bitcoin.
Yeah, exactly.
So the only difference is the physical element of it and divisible. You can divide it into many different pieces.
Exactly, it's divisible.
I don't buy that divisible argument. It's so.
I think it's a mentality. Whatever is a good investment needs mass, and if enough people thought Bitcoin is nice, then it's a good store of value because it's tech, it's trendy, it's new, disruptive, or the buzzwords, right? Gold is just old, chunky.
Yeah,
so I think there's an element of FOMO.
Yeah. So what I'm saying here is, I think store value is the typical answer that everyone says when you ask them why you investing in Bitcoin, right? But underlying that is the FOMO that Along is saying. It's the trendiness of Bitcoin. It's the thing that everyone talks about. It's the press coverage that it gets at the moment. It's a whole ecosystem of narrative around the asset that brings it value. But if you really strip it down to its core fundamentals, wouldn't it make more sense to put your money in gold if you truly believe in the store value argument?
Yeah, like gold, I think will continue to be a store of value. A lot of people are still gonna believe in gold. Bitcoin is just an alternative for people, right? And behind gold, like why is gold a store of value? There are also many different other scarce commodity, but it's the story that that has historically established this common consensus among the society that that view gold as a store of value, right? And then the same narratives is playing here with like Bitcoin. It's all narrative. It's the consensus that we come together as a society.
I think it's not a store of value yet. It may be, but now it's just the growth. Gold don't grow 2 times, 10 times in 1 year, but Bitcoin does. So
yeah,
of course there's a lot of risk too. So we're not
exactly. So it's still early days of Bitcoin. I think we have reached a stage where we have mass awareness. We haven't reached the stage of mass adoption yet, but as more people are gonna adopt it, the price is gonna stabilize. Currently, it's still in a price discovery mode, and that's why you see a lot of fluctuation in price in the markets. Now, if you buy Bitcoin, you're basically betting on the future that it could potentially be a good store of value.
Tell me the fundamentals here of Bitcoin. So the same quantity of Bitcoin will always circulate in the internet, but at the moment the availability is not full, it's half. Every time you help to mine and you help to solve a complex problem, you get awarded with Bitcoin. Where does that Bitcoin come from? Can you explain?
So currently, like every time that a transaction is processed, and you're verifying the Bitcoins,
yep,
then those who facilitate the transactions, like for example, you are the one who facilitated the transactions, you would pay basically an amount in dollar transaction costs, right? And a Bitcoin will be minted.
Mm-hmm.
It will be supplied into the market, but there's a cap to it. There's only 21 million Bitcoin available supply in the market. We have not reached there yet. But it will eventually reach there. It get capped there, and because it's going to be limited in supply, it's going to be a good store of value. It's going to be scarce, and people want it because you cannot supply more money into the market.
Definition of minted. What the hell is that?
Minted is basically like how bank mints coins, right? Bitcoin is the same. It's just happening virtually or digitally.
What's stopping a dude hacking into the system and then updating it so that the cap is not 21,000 anymore?
Well, it's basically a protocol that has been set up like right at the birth of Bitcoin. Bitcoin is controlled by Bitcoin users around the world. And there are developers out there who are improving the software or improving the blockchain itself, but they can't force a change in the rules of the Bitcoin protocol because, like the users can choose to use whichever software that they use. You can't really easily change these protocols that are set out from the beginning. They can improve the system, but the core protocols, they cannot change it.
Agree.
Okay, let's move on.
All right, guys, this feels like a good place to end the episode. We've talked about careers in investing as well as a heated debate on Bitcoin. Now, Andy is a very special guest. That's why he's gonna have 3 episodes with us. And on the next episode, we're gonna talk about NFT and answering the many questions that the audience had for us. As always, join our community at Convo Comrades on YouTube, Spotify, and Apple Podcast. As for now, bye-bye.